Checking out. There we go. So, does anybody have anything they want to talk about before we start our negotiation?
No? Did you get our...
Does everyone understand what we're doing?
Yeah.
Yep.
Okay.
Yeah.
Did you get our proposal?
So, we did. I did.
Okay.
And I kind of started chuckling because it's very close to what Jake and I were talking about last night.
Well, that's good. Easy negotiation, right?
Easy
Right.
negotiation.
Yeah.
So, looking at the case discussions, it asks which team had the highest pre-money value, the lowest, and where did your team fall?
I think we're
And then
supposed
it
to
talks
do the
about
negotiation
choosing.
first.
Sorry? Oh, okay. Should we do that? Okay.
Yeah.
So let's go. The first one. How much capital? So Jake and I were talking about, actually I should go to, I'm going to pull up another email window so I can put both of them next to each other. I'm going to try to get into our negotiation page. Jake, did you write down this stuff? I just typed it out.
No, I didn't.
Okay. I probably should have done that too, but we actually were looking for $3 million.
That's right. We win.
Yeah.
I agree.
So we were looking for an investment of $3 million, and that's what you've offered. So I think we'll take you on that.
Okay.
And then we were looking for a post-money valuation of $9 million, which you are offering.
Yeah.
So we're good with that.
Yeah, we thought that was fair.
My other email's slow.
Size of the option, 15%.
I think that's what we wanted, right?
Yeah.
Option pool, we were looking for 15%. What you've offered.
Yeah.
Were you spying on our meeting last night?
No. We did ours Tuesday, so we were
Yeah.
there first. It's just our instructions were to not post it until 15 minutes, at least 15 minutes before yours. So.
Cool. So, board composition, there is a difference. We feel that it would Maxwell should be a part, but we're looking for a 4-seat board with both Maxwell and Taylor. The reason being that this is Taylor's deal. She's got the major connection with the two-wall farmers, and a major concern of hers is decisions that could compromise the types of ingredients that go in, the agreements that she's set up with the farmers in India, and given that there's probably going to have to be an increase in the two-wall harvesting, those decisions, we feel she should be involved in those. However, Maxwell we'd like her to be on the seat as well. So we were looking for a 4-person board.
Yeah.
Well, let's talk about that.
Yeah.
So.
Okay.
So I think an even number of people might be hard to make decisions with. So would you be in agreement if we let you have Taylor be an observer and not have a voting right, but you could still be there for, board meetings and things?
That 4-person boards are hard to work with?
Because they're being an even, it's hard to come to a majority vote sometimes if it's evenly split, and then it makes it very difficult to make decisions.
It can be. There are 4-person boards to be successful. It does make it harder when it's even. I know that in the past there have been a lot of capital or VC firms like having a 3-person board as opposed to a 4-person board. But I think, I don't know about Jake, having her as an observing non-voting participant, I think we'd be open to that.
Yeah, we could do that.
Yeah. Okay, so then that makes the board proposal to be Ed Rodriguez from DuPage, Sarah Maxwell from MuMate, and then a third person that you would propose and we would have the right to accept or refuse.
And then Taylor is an observer.
Yeah.
Right.
And Cantor from DuPage would also be an observer, but non-voting.
Yeah, that works for us.
Cool.
All right, sounds good.
All righty. So the other terms that we were proposing, the only additional thing that we were looking for, grab my page here. Was it was and it's number 6 on the list. So it was the same. The founder common shares vest 25% on closing, with the balance vesting linearly for 36 months. And that was the only other one, so that matches, so we don't have any issues there.
Okay.
Jake, looking at their other terms, is there anything out there that stands out to you that we would want to have to talk about?
Not as far as I can see.
So that seems to be a fairly straightforward process. Do we have a deal then?
I say we do.
I say we have a deal also. That was pretty easy.
Yeah. We look forward to growing your business.
Yes.
Hey.
Yeah.
Did you guys' last negotiation take forever to do?
Yeah. Only
it took like an hour and
half of us didn't know what was going on. So.
Yeah. It took a lot
My
longer.
group took like an hour and a half of just pure negotiating. It was.
Yeah. That's why I was like,
my group.
It's like something's wrong. This one's going way too easy.
Yeah.
I know. And we thought that some of the things you would feel differently on, and we'd have to talk about it, like the option pool. We thought
that's
you'd want
the same
smaller.
percentage that we got.
Yeah, we thought you would want that smaller. And the number 6 that you asked about, Jeremy, on the bottom of the list, we really thought that that would be a sticking point too.
From the studying I did, it just doesn't seem as bad, and that's probably also has to do with my lack of knowledge generally in this area. But I mean, comparing it with other, so one of the things is one of our confidential information, to let you in on our secrets now, is that we at the time of this negotiation, MuMate actually received they were working with others, and they got 2 other proposals. So we had 2 other proposals to work with and compare with.
Mm-hmm.
And one of them was with a group called Astoria Partners, who were offering raise plus a $7.5 million pre-post money valuation, and they were looking for 33.3% on closing, and having that vest linearly over 24 months. And then the second one was pretty much identical to what you offered, and if we hadn't closed a deal with you guys, the other option would have been what we wanted. So,
Okay.
or that's the other option that we probably would have chosen.
Yeah.
So a lot of the things that a lot of your terms that you proposed were pretty close to what we were hoping for anyway, based on what we worked on.
Well, sounds great.
Yeah. How did you come to that 25% on closing?
Well, that was kind of given to us as, let's see, what does it say on here?
That was like in our confidential information.
It was in our confidential information, and it said that it was, let's see, terms that are generally used in these kinds of deals.
So we went with it.
Yeah, looking at sounds good. That's a good idea. Yeah, looking at listed shares subject to buyback at fair market value, that was a term for both of the other proposals that we'd received. And then Astoria was giving less, but there was a higher post valuation, and they were asking for more. And our line of thought was, since we were getting a little bit of a lower valuation, that it wouldn't be an issue if it was around 25%. I was a little worried that maybe you'd be asking for more than 25%, but when that came in, that worked.
Mm-hmm.
So if it had been higher than 25%, we would have had to have a talk about that.
Yeah.
But I started kind of chuckling when I saw everything. I was like, oh, that's pretty much what we wanted.
Yes.
So cool.
Yeah.
So the lesson learned is all negotiations are easy.
Yes. Yeah.
No, they're not all easy. Some of them are not easy.
I wish that was the lesson. Yeah.
Yeah.
Anything you wanted to add?
No, I guess that's it on that.
Alrighty. Well, we've gone over the goals and stuff.
So do we need to have a separate video for our group discussion after, or just use the same one?
I think we're using this one.
Okay.
Because we don't have to post this negotiation or the summary or anything. This is just our meeting for this week.
Yeah, but we do have to post it.
Yeah, I can do that. Looking at our instructions are afterwards. We have to report the negotiation outcomes using a poll.
Yeah.
Negotiation outcomes. And it says, please only send one poll response per team, and the DuPage side does not need to complete the poll.
Right.
Yeah, because we did
So
everything.
I can do that, and it's not posting the video. It's just, I think it's just asking the questions of what the outcomes were and stuff.
No, we have to post the video just as our regular course stuff. You know, for the MuMate post discussion poll. You know how it asks us to post the video. Yeah.
Yeah, I think this is just our meeting for that.
Yeah.
So looking at some of the questions, It asks, how important is this deal to DPV? Is it once in a lifetime pretty good or pass?
I don't know. I would say we really wanted it to work out.
Yeah, I think it was probably, I don't think it was once in a lifetime, but probably a pretty good on those choices. What do you think, Rachel?
I know that a protein drink is a once in a lifetime.
Yeah. Oh, is Jake done? Oh, he's back.
Yeah, his the Wi-Fi in his building is sketchy sometimes.
Well,
Yeah.
Okay.
Did you have to go to the roof tonight?
no. I was already down where the Wi-Fi is supposed to be good, but it's still terrible.
And then it asks for the DuPage people, does MuMate fit your investment focus?
Yes, it does.
Yes, it does fit our investment focus. Because
Cool.
that was one of the things that Cantor had been hired for, was to look for healthy brands to bring into the company. So are we supposed to start with question number 1 instead of in the middle, though? Or number 3, I should say?
Oh, yeah, I just skimmed over because we'd gone over some of that stuff already.
Okay.
What are the goals and all that? Unless you really want to go over that stuff.
Yeah.
But I thought we kind of already hit, like, I mean, the valuation. I mean, was your goal for the negotiation for the valuation, was that what you proposed?
Our goal for the valuation was 9,000 was where we were going to start, and that was what we wanted to get as a high. Lower would have been better.
9 million?
Yeah, 9 million was a high. It was kind of in the middle of where our low and our high were, so we went in the middle.
Okay.
Because 7 million would have been great for us, because we would have had a really high, percentage of your company.
Yeah, and that was a concern for us.
And for the internal rate of return, see, I think we figured it was like 30%. So that
it was pretty close, like 29.8 or something.
Yeah. So that worked really well.
And that's what we were. That's about where we talked about that 30. The 30% window.
Yeah. And then the board seat, our goal was to have, one from each, and then what we proposed to you. So we got that.
Mm-hmm.
Yeah, on question 3 above, I don't think either one of us showed extremes. So.
No.
I don't even know what that means.
Well, I think it's like
extremes in performance.
Well, like if we had proposed 7 million and let's say 20% for the pool.
Option pool.
Yeah, for the option pool. And if what was the other things that we could have changed on there that would have made it more extreme?
We could have given you like 1.5 million. We could have done that too.
That was one of our considerations, to give you half now and then maybe do half in another round.
Okay, I'll be right there. Yeah, that one of the options came in, one of the other proposals came in, and that wasn't attractive to us.
Mm-hmm.
So that could have been a sticking point. Yeah. My wife has to get up at 2 a.m, so I'm going to go say goodnight to her, and I'll be right back. But okay. Keep going on the questions, and I'll stab back in.
Okay. Let's see here.
So are we on question 5 now?
Down to 5.
Yeah.
So
I guess that's you, Jake, since Jeremy stepped away.
Yeah.
So did you guys see things the same way, or were you focused on other interests?
Yeah, we were pretty much able to see the same way, just because what we did, like he was saying, is we just got the average of the two that we'd already been given from the other two VCs, and then we pretty much just averaged those out, saw which one was better, and so we pretty much saw it the same way.
Yeah. I guess for negotiations, does that mean we go for the average? And that's pretty comfortable on both sides.
Yeah.
Yeah.
So
Yeah.
was anything more important to you on those terms?
Like you guys were talking about earlier, like with the option pool, that was something big. And then also, of course, with the pre-money value too. Those were probably the two most important things.
So which one do you think was more important? Because it says, write down an order of importance.
Probably the pre-money value.
So what was more important to you on the other things, the board composition or deal terms?
Probably the board composition and then the deal terms. So it'd be the pre-money value, the option pool, board composition, and the deal terms.
Okay. That last question's kind of tough. So who has the upper hand, DuPage or MuMate?
I don't know if either one of us have the upper hand because we came to an agreement, right?
Yeah.
Because although we have differing priorities, we came up to pretty much the same thing.
Yeah.
For our particular team, it didn't affect us too much.
Yeah, that's true.
Even though I'm sure all venture capitalists think that they have the upper hand.
Yeah.
Yeah, because it's like, okay, we have the money, so you can do your terms or,
yeah, that's true.
I guess it could be it depends on how many offers MuMate would have received.
Yeah, well, that's the next question. It says, how did the Astoria and Prosper term sheet affect your guys' negotiation strategy?
So that basically was our negotiation strategy, just averaging out those two, seeing which one gave us the better offer, pretty much.
Yeah, let's see. It says, what are the pros and cons of Astoria, Prosper, seeking capital from angels? Was that another option that you guys had?
Not sure. I would have to pull that up.
Or maybe that's probably always an option from anyone, right?
Mm-hmm.
Yeah, definitely.
To go seek angels. So, but
yeah.
All right, Jeremy. So we're on. I think we're moving on to question 7 now.
Well, we still need to finish up 6. It says, what are the pros and cons? So what were the pros of those the other ones, and what were the cons of them? Of your other
Sorry, I thought we'd gone over that.
We kind of talked a little bit. So the pro of Astoria was that it was a $10 million post valuation, and that was only getting them a 25% stake.
So
the Prosper Fund
was a con or a pro?
Well, compared to Prosper Fund, it was a pro because Prosper was looking for 7.5 post valuation, but they wanted a 40% stake. Or that's what it would have gotten them.
Okay.
Prosper was actually offering the 4-member board, so they would have been that was the major thing, is that they would have been accepting of a 4-member board, including the 2 founders. but the valuation was lower than Astoria, who wanted a 3-member. The major con to Astoria is that they're known to replace founders more often than other VC firms. And there was a rumor that they're struggling to raise their next fund, so they're kind of under pressure to show good returns. So they probably, if we had taken the deal with them, it would have been there would have been more pressure on us to perform sooner than if we were to go with Prosper, who was earning attractive returns at the time. Oh, and Astoria probably, I think I mentioned, they would have wanted to replace the CEO sooner than later with somebody that they could choose. So it's a higher post-money valuation, but it would have been probably less fun to work with.
Okay.
And then the Angels, it would have been harder to earn. It was going to take a lot more work, and there's no guarantee of how much money we'd be able to raise. But that would depend on how hard our feet pounded the pavement if we decided to go that route. Anything else? Jake, anything to add?
No.
All right. So how did the VC go about valuing MuMate?
We had a tough time trying to figure out how to value MuMate. So
Yeah, in our confidential stuff, they'd kind of given it to us with their options between if we went with the 1.5, giving it to you at the beginning, or the 3 million.
Mm-hmm.
And so we just kind of went with their numbers and multipliers. So
yeah. So we yeah, because it was we looked kind of in the middle of the target range of what they were looking for valuing it, and then we kind of reevaluated a little bit when we figured out we had it backwards.
So then it asks, from that exit value, what exit value were you expecting? Did you come up with?
At the end of 2015, for the exit, we were looking for 20.4 million.
Again. Sorry, Shirley, what was that again?
At the at the end of 2015, for the MuMate exit, we're looking for a $20.4 million exit.
Alrighty. And then from that exit value, how much money did you need to receive in order to get 5 to 10 times on your investment? I guess it would just be 5 to 10 times that, right?
yeah, pretty much.
What share of the equity would that dollar amount equal?
That would have been the 30% for us.
Yeah.
And then what other means did the VC use to value the company? And then it says, share your spreadsheets and talk us through them. Did you use a spreadsheet?
I didn't use a spreadsheet.
Yeah, I really didn't do much of a spreadsheet, so.
That's okay. All right, so what have we learned about bargaining tactics? Should MuMate disclose that they have other offers? Well, we already did that, so.
I mean,
But
should
had we
do-
not done that, I would say if we were in a real negotiation, I would not, knowing what I know right now, I would probably not be predisposed to disclosing that we have other offers.
I think if it was us two, I wouldn't disclose those. I would still say we're looking at other offers as well.
Yeah, I think I would disclose it like that, like Rachel said, because that way DuPage would know that they're not the only one interested in the company.
I think that is mentioned in the case study that Maxwell does say something to that effect.
Yeah.
But no details got out. It asks, do hardball tactics make sense in a negotiation like this?
Well, from the experience we had, I don't think so. But
I can see, if you guys were really, really set on something, that be hardball about something. If it had gone.
Yeah, I guess it really depends on how close you are to your terms. I mean, if we were relatively close to what we wanted, you're so close to getting something. I don't know. It kind of goes back to to Jim Sharp, who was trying to buy that business, and it seemed like they were relatively close, but he decided to get up and walk out, and then realized that might have been too hardball.
Yeah.
Yeah.
I think the hardball tactics would be better on the MuMate side if the other offers they had, if any of the other offers they had were acceptable to them. Because it's like, well, you know what? One of these is good. We can take it. So we can play a little hard with DuPage and see if we can get something better. Because if we can't get something better, then we can take the other one.
That's true.
I think with DuPage it would be a little harder because it's like, if you play too hard, then the company will just say, well, we'll find our money somewhere else,
Yeah.
Yeah. I think the one thing about the Prosper Fund and the terms that we had between our teams were, it was a higher valuation, even though Prosper was looking for that 4-member board. We're getting more money. We're raising the same amount. We've got a higher pre-money valuation, a higher post valuation, and everything else kind of lined up. I mean, for me personally, the board, the number of people on the board was one of the lowest priorities.
Then we might need to go back and fix number 5. Because we talked about that when you were away.
Yeah, no.
Number 5 says to put them in order of importance, and so you had for MuMate that pre-money value was the most important, followed by option pool, board composition, and then the other deal terms.
Does it say other deal terms? Mine just says deal terms.
It just says deal terms, so that would be the other things on there.
Yeah, I kind of lumped that in with everything together, but yeah, I mean that's pretty much what it was. Pre-money was for me. Board composition was definitely below option pool though.
Okay.
So key takeaways. Terms allocate economic and control rights.
They do.
Conflicting priorities of investors and entrepreneurs in upside and downside scenarios. I mean, there's bound to be conflicting priorities. I mean, the investors want, like in this case, it's a very kind of green, save the earth type priority with the two-wall harvesting and everything, and the ingredients they're going into. The whole reason that Taylor started the company was because of the potential for this healthy drink, and compromising certain things like ingredients and sugars and things like that would be a major sticking point for her.
Yeah, where our priority might just more be like, let's make sure this isn't a fad. Let's make sure we spread it wide so we could get lots of money off of it.
Yeah, I was surprised too about what was it? like how much it cost for them to make their product, making it for like what was like $1.23 per container that they were selling, and then they were selling it for $1.90. So it's like the profit margins weren't that. That's what they wanted, I guess.
Yeah.
Yeah.
So that's something eventually that DuPage would probably say, you need to do something about your packaging or about your ingredients.
Yeah,
because
definitely.
that's not enough of a margin.
I mean, on that, I would not be opposed to raising the price, because a lot of those drinks that are comparable in stores, they're well over $2.50.
Odwalla and all those.
Mm-hmm.
Yeah. So I was looking in this case to find out why they were charging so little, it seemed to me. But I didn't see anything in there that said that Taylor's, the price was like something that she felt was like a big important thing to keep it low. And if you look at Maxwell's motivation, she was looking at the affluent young programmers and those people that could afford healthy lifestyle alternatives when it came to diet. And if you're looking at the affluent market, you're not trying to underprice other products.
Probably because she was selling it to all yoga students at first, and they probably only have like $5 cash on them. So I'm sure they can afford it with the cash in their pocket. I don't know.
Get one of those iPod squares that run credit cards.
Yeah.
Alrighty. Terms have a price. Were there any prices in our terms?
Yes, because the higher the valuation is, then the lower the percentage that DuPage gets. So that's a price for them, and the same for you
Yeah.
guys, because the lower the valuation is, the higher that we would have. So then your price would be less, of the company.
Less
And
equity.
yeah, less equity. And then, I mean, besides a financial price like that one has, you have the board, for instance. That's a price of, will you lose control of your company if you have the wrong people on the board? And because although there's the two that can observe, they can't vote. They can use a lot of persuasion because they can talk. It doesn't. I mean, although it says observing, I bet they can probably talk. They just can't vote.
Yeah.
And but let's see what else could cause a price. Oh, the size of the option pool would be a price, because the option pool is going to come out of MuMate's shares.
Yeah.
And so the bigger the option pool, the less there's a price there for for the founders personally. But it sets it up that you can hire people better because you can give them a share of the company. And some of these other
Makes
things,
sense.
some of these other terms have prices too, like anti-dilution protection. If you got funding someplace else before it went IPO, that our shares wouldn't get diluted. So there's a price for everything.
Good.
And then we're supposed to discuss the VC valuation techniques.
Well, really all they gave us was, it said Cantor did some back of the envelope valuation calculations using an approach often employed by his colleagues.
Yeah.
That's pretty much what it gave us. So apparently I wrote some calculations on the back of an envelope. That's how it's done.
Uh-huh.
This is what future sales might be and what the company could be worth.
Yeah.
Fly by the seat of your pants.
Well, because it's really difficult to value something when you don't know what it's really going to do. And you put all these numbers in there. You say, I've
Yeah.
had this progress, we've had this kind of growth so far, so we think it's going to still have the same percentage of growth for a while, and then it'll taper off. But all of that is just guesswork. Nobody knows what's really going to happen in the future. So when you look about how much you're going to how much you want to get out of it. So when you get 30%, when you want to have 30% out of it, then you have to put your valuation in the right place that will give you that 30% too. But then you also have to look and see if if the company can actually make that.
Did you compare it all to other beverage companies that were similar?
We did, yeah.
And yeah, the ones that were
Yeah, that seemed. Sorry, go ahead.
yeah, the ones that were similar, they seem to have some, I don't know, it's difficult to tell on that.
But it did come. I know we've done that a couple times in couple different case studies, comparing to other similar companies and how they've performed. Oh, like with the noodle company in Brentwood,
Yeah.
Mm-hmm.
Zoe's Kitchen.
Sorry.
Alrighty. Well, I think that those are all the questions. Who does anybody want to do the summary? Does that need to be me?
I don't know.
I can do it.
Okay.
Alrighty. So we completed our negotiation and closed the deal between DuPage and DuPage Ventures and MuMate. We agreed after much discussion on a capital raising of $3 million and a post-money valuation of $9 million with a 15% size of option pool, or total shares outstanding after the round. We settled on a 3-person board with Maxwell from MuMate, one of the co-founders, 1 seat for DuPage employee, and 1 other seat suggested by MuMate and acceptable to DuPage. The other terms were agreed to, including the convertible preferred stock with an 8% annual dividend, the voting rights for Series A, and the options for anti-dilution protection. We agreed to founder common shares vestige of 25% on closing. Going back to the board, Ms. Taylor would be an observing member, but non-voting. And was there one more?
Cantor from DuPage.
And Cantor. So there would be 1 observing and not yet non-voting person on the board from each side, making the total board 5 people with 3 voting. And then we discussed how the valuations were arrived at and what the priorities ended up being for both sides. For MuMate, the priorities were the pre-money valuation, the option pool size, board composition, and then the other terms. And that is pretty much it. Anything else to add?
Nope.
Nope.
Alrighty. Well, thank you, everybody.
Thank you.
I will stop the